Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 1st. I want to take just a brief moment to discuss what markets did last week as the rotation from the Magnificent Seven to the everyday stock continued with the S&P 500. The index itself was down 83 basis points or down 0.83% on the week. However, the mid cap index was up 1.98%, and the small caps took the week up 3.7% on the week as you saw the selling from the Magnificent Seven to buy the average stock. And what you saw coming into this week is probably a little bit of an overreaction and overdoing selling the Magnificent Seven. The other thing that we have this week is we've had two things. We've started to get earnings from some of the big cap tech companies, as well as we had a Fed meeting this week where Chairman Jay Powell laid the groundwork. As long as inflation and the data continues to be good, which we suspect to be the case, he laid the foundation for cutting rates in September. And that is going to be another case for the broadening out. We'll discuss that in a little bit as well. But what we've seen this week is we've seen the reversal back from the broadening out and back to some of the more growthy tech names. And that is just because for two reasons. One is a little bit of overselling. So you overdid it on the downside. So there's profit taking and there's downright corrections. And a lot of these stocks, the Magnificent Seven, moved down 10% plus in a week's time. And so you're seeing some profit taking there, as well as some correction, and momentum builds on momentum, whether it's to the upside or the downside, until there's an event that stops that. And then this week we've started to get some of the earnings. We got Microsoft's earnings, we got Alphabet's last week. The earnings for these companies are fantastic, and the growth trajectories are fantastic for them as well. We've talked about how big of a boon AI is going to be for these companies, as we talked and likened it to the next industrial revolution, as it being the pathway to keeping productivity up and the economy moving forward. So though you're going to see nothing goes in a straight line. So as you're seeing this starts and fits with the value trade or the everyday stock over the Mag 7 participation, you're not going to see it go up in a straight line. You're going to see some back and forth here. There are going to be days and weeks where growth outperforms, the Mag 7 outperforms. But there's plenty of opportunity still underneath the surface to find some cheap stocks that are going to be beneficiaries of lower interest rates. The reason why you're seeing such significant selling in the equity markets today on Thursday, August the 1st, is we got economic data that showed jobless claims were higher than expected. ISM manufacturing came in below 50 at 45. Anything below 50 is recessionary. And we were hoping that we were out of that recession in the manufacturing sector, but it looks like it may be a double dip type of recession in the manufacturing industry if it doesn't start creeping up soon. So now investors are saying, okay, great, we have this foundation that the Fed's going to cut rates in September. Now the argument's going to be, is it going to be too late for the Fed? Did the Fed move too late? Are we going to have too much damage economically? We get a jobs number tomorrow morning. We get plenty of more economic data this month to support what they're going to do next month in September. We believe, as I've been saying for the last couple of weeks, that they should have cut yesterday when they met in their press conference to be ahead of it, but they are allowing the market to drive what they do at this moment, they being the Fed. There is about a 100% chance the market has priced in a Fed rate cut in September. The Fed is not getting out ahead of the market. The market is telling the Fed what to do, and the Fed is responding to the market. Not always a good thing, but as always, if you have questions about your portfolio, how to navigate it, what to do about it if this rotation is really happening, remember, as these interest rates start to come down, some of these names that have been held back the most will be the beneficiaries, and their margins will increase. As the pressure of higher rates comes down, margins will start to expand for some of these companies, with all things being equal. So profit increases, EPS increases, all things remaining the same with lower interest rates. So as always, remain calm, stay in there, and call us. We'll be happy to talk to you and help you navigate these markets. You can reach us at 904 888-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks so much for watching.